Okay, good morning. For our last week of class, we're going to be finishing up class today, Wednesday, this week. So we're starting with a question. This first question we have up here, of the three types of cash flow, so it relates to last week. Last week we talked about the statement of cash flows. The statement of cash flows has three cash activities on it. The first one's operating, which is from our generated by the reason we're in business for. Then we have investing, which is like property, plant, and equipment. Then we have financing, which is long-term liabilities, and equity. So the statement, it says, of the three types of activities reported on the statement of cash flows, investing activities are the most important when evaluating a business, true or false? The reason this is false is because of that word investing. Operating activities are the single most important cash flow when evaluating a business. So this question will stay open for a few minutes. It will close at some time before we go on to the next question. So if you're just coming in, you've got a little bit of time to answer it. It'll be open for a few minutes. We won't announce it when it's going to close. But before we get to the material for today, I do have a series of administration announcements. Some are repeats from prior weeks. Others are new material or clarification and things like that. So our final exam is next week. It's over chapters 9 through 13. It is not cumulative. It's not comprehensive. It's just covering those chapters. It starts Monday, December 14th at 8 a.m. through Thursday, December 17th. You have to start the exam by 4 p.m. Starting it at 3:55 p.m. is probably not a good strategy on Thursday, just because you're out of time if something goes wrong. Section 7 and 8, you should be scheduling with ProctorU very soon to get time on their schedule. Here's a heads up. For ProctorU, if you're on ProctorU, know that ProctorU has a lot of final exams going on during this month. And so allow yourself adequate time. It might take a few more minutes than normal to get started, just because they're at their peak crunch time too, so just know that going into it. Okay, what's due this Saturday? This Saturday, December 12th, is an important day because we've got Chapter 13 homework due. The Chapter 13 homework isn't overly long. The extra credit, if you're doing it, is due this Saturday. Practice Exam 3 is due before you take the exam. So Practice Exam 3 is going to be out there for a little while longer. So it's not due by Saturday. It's due before you take the exam. Now, something to note about this Saturday. All homework is due this Saturday. It cuts off. You cannot do it late. You can't do it for the 10% off each day late. It all cuts off. There's no extensions, no late submissions of the homework. And also the same thing applies to the extra credit. If you're doing the extra credit, that's it. Everything's due Saturday night. The only two things that are not due Saturday night is the practice exam and the final exam. Okay, what to expect during finals week? Okay, your syllabus says your two lowest quizzes will be dropped Friday, December 18th at the end of finals week. I can't drop it until all the practice exams are done. I'm going to go ahead and drop 3, so that gives you an extra drop. Know that if you have 100% on every single quiz you have, even if I drop 3, it cannot lower your grade. Okay, so your 3 lowest quizzes will be dropped Friday, December 18th. Until that time, they will be in there. I can't drop them until all the practice exams are done. Okay, I will be working on final grading for this class Monday after finals week, because our final goes through Thursday afternoon. I'll try to work on it over the weekend. Sometimes I need to wait until Monday for various reasons. I hope to have the grades entered in FlashSign sometime Monday. That would be a best case. Well, best case is I will do them Friday, but I never want to promise that. I will do your grades as soon as I possibly can get them done. Once you finish the exam, after everybody finishes the exam, so keep in mind, this is Thursday night, everybody's done with the exam, then what I do is I download everyone's grades and I look at averages for everything. I look at every single person's grades to make sure that everything looks okay. So I do a lot of analysis. I go very slowly because I know your grade's important to you. I want to make sure I get it right. So that process takes a little bit of time. And here's a big important thing. I will not adjust one person's grade. I have 500 or 600 students, and guaranteed there will be students on the border. It doesn't matter where I draw the line. On the syllabus, it says that 90% is an A-. If you get 89.9, that's a B+. No matter where that cutoff is, there will always be someone right on the other side of it. There is no way for me to say, oh, okay, well, we're going to draw the line here, and yeah, I'll bump you up, because then what about the people in the next lower tier down? They could be bumped up. So an individual person, an individual student, I will not bump up an individual student's grade. If I do any bumping up, I'm doing it across the board. Everyone gets exactly the same treatment. So don't feel compelled to write to me to say, could you give me another couple percentage points on my grade because I want a higher grade. It's not going to work that way. I will treat everybody absolutely the same. It's not fair to me when someone writes to me to say, oh, okay, I'll bump you up. You're right, you have a nice story, I'm going to bump you up. That's not fair to everyone else. So everyone gets bumped up or no one gets bumped up. So I also can't discuss individual grades until all grades are in. So if you take the final exam Monday or Tuesday and you want to write to me and discuss your final grade, I can't have that conversation with you because I don't know. Grades aren't done until I do them. Now, when you finish the final exam and look at your grade in My Accounting Lab, if you go into My Accounting Lab course home and then results and then overall score, that's your percentage score. You can look at the syllabus, look at the front page of the syllabus, it gives the cutoff. Your grade will be no lower than what you see there. But keep in mind, when you finish the final exam, I still have to drop 3 quizzes. That will happen Friday of finals week. So the 3 quizzes will get dropped then. And then at some point before I enter the grades in Flashline, your extra credit will be added to your overall grade, but it will never show up in My Accounting Lab. Logistically, I can't put it in My Accounting Lab, so know that those are all going on. But I won't be able to discuss your final course grade until I actually do final course grades, which will not happen until Friday and Monday after finals. Because our final goes till Thursday afternoon, grading is probably going to occur on Monday after finals week. An 89.9 will not round. They don't do any rounding, no. And the person that said, did you have one? Will the quizzes be dropped even if it lowers our grade? It is not mathematically possible to lower your grade by dropping quizzes. If you have all 100% grades, you have 100% average on quizzes. If I drop 3, your average on quizzes will still be 100%. Okay, the final course grade, again, if you do the extra credit, you qualify for the extra credit, it will never show in My Accounting Lab. That's going to be added when I do your letter grade in Flashline. You're probably going to be checking Flashline, so you're going to know before I can possibly get it out, but I will email out an announcement once the grades have been posted to Flashline. Okay. Okay, extra credit. I've gone over it a couple days now. the details for the extra credit are in Blackboard. It's due Saturday, December 12th, 11 p.m. There are no extensions. There's no partial credit. The requirements for the extra credit is you do all 10 steps with a score of at least 80% on each step. If you miss one step, you don't get the extra credit. You have to do all 10. It's an accounting cycle, so you have to do every step in the accounting cycle. Now, this is important. Don't wait till Saturday to do it. It's too much to do on one day to sit there, especially when you've got finals to do. So if you haven't started it by now, you should. The cutoff for emailing me for help is 1 p.m. on Friday. Okay? What's going to happen after 1 p.m. on Friday is there'll be an auto response that I'll put up, and maybe I'll post the hints in Blackboard, but we'll have hints posted about the extra credit, but we'll not be able to help you on a case-by-case basis after 1 p.m. Friday. So you need to start it, work your way through it. Any questions need to be in by 1 p.m. Friday. Okay, office hours during finals week, they are different. Office hours during finals week will be Monday and Wednesday, 9 to 11:30 a.m., and I'll be sending out an email with that as well. So office hours during finals week are the same days as our regular class, but 9 to 11:30, so a little bit later, starting a little bit later than class would. Okay, so questions about any of that? Forward then. Okay, so today we're doing financial statement analysis. So we've gotten to the point where we've walked through all the financial statements and how to prepare the financial statements. Now in this chapter we say, okay, there's some things we can do with those financial statements. So this chapter to some extent overlaps finance a little bit. Okay, so we're going to have ratios in this chapter. I will tell you this chapter has a lot of ratios, like take this, divide by that. All the ratios you need will be on your exam reference sheet, so you don't have to memorize any of these ratios that we're talking about. Okay, so today we're going to do a little bit of looking at statements and how we can analyze statements. So the actual ratios that we do, we will do in class on Wednesday. Today we're going to do the first couple learning objectives, which deal with doing whole statements, looking at trends in statements. Okay, so the first one we're going to do, horizontal analysis. Horizontal analysis is basically comparing the changes from one year to another. If you look at an income statement or a balance sheet all by itself, it is rather meaningless. How it has meaning is to compare it over time or to compare it to competitors or peers. So horizontal analysis looks at changes from year to year. The first thing you do is compute the dollar change from one period to the next and divide it by a base period amount. Okay. So what we're doing with horizontal analysis, two steps. Compute the dollar amount, so figure out the difference from year to year, and then divide it by the earlier year. Okay. I assume you can hear me online. We just changed audio sources. You can hear me, right? Thank you. Okay. Okay. So horizontal analysis, we're comparing this change year to year. This is Amazon. And again, we've got 2 years side by side. We have sales in 2012 and sales in 2011. So the first thing we're going to do is we're going to take the difference between 2012 and 2011. So we'll take the difference between the 2 years, just by subtracting them. So that's 13,016. And then we're going to divide the 13,016 by the earlier year. So we're taking the 13,016 and we're dividing it by, we're taking the 13,016 and dividing it by the base year, which is the earlier year. So we're going to divide that, and we get the percentage change for the period, which is 27.1%. So Amazon sales increased by 27.1%, which is more meaningful than saying, well, Amazon sales increased by 13 million. How much is that to a big company like Amazon? So here we have the 27.1% change. We can do this with any, we're gonna do one of these coming up here. Okay. We can do this with any statement. We can compare year to year, like comparing earlier year to this year. You're always going to take any year, the change from year to year divided by the base year. We're going to do an exercise right now where we get to do this. Oh, okay, before we get there. We can do, wow. Okay, that's what I'm going to do. Okay, so Amazon's income. So the first box I have here is Amazon's income for 2012, 2011, 2010, 2009, and 2008. So we have 5 years of income. So what we can do is figure out the trend as each year as a percent of the earliest year. So for 2012, we'll take 2012 divide by 2008, and we come up with 80%. For 2011, we would take 2011's income divided by 2008. And what we get in this bottom section here is comparing Amazon's income each year is to this base year of 2008. They were able to exceed 2008 by a good amount in 2009, 2010, a little bit in 2011, and then they fell down a little bit in the income in 2012. So trend percentages can be compared to any year, not just the year before it. But trend percentage, you take the difference between this year and the comparison year, divide by the earlier year. Okay, we're going to do 2 exercises now that we go through horizontal analysis on. And the homework this week is not too bad. It's fairly short. So the first one is short exercise 13-1, and we're given revenues and expenses. Okay, now the instructions on this exercise say to perform horizontal analysis of revenues and net income. The key there is net income. We're not given net income. We're given revenues and expenses. So what we need to do is calculate net income. Net income is going to be our revenues minus our expenses. So what we're going to do, first thing we're going to do is what I'm doing, and you can just, we have revenues, expenses, and net income. So revenues minus expenses are going to give us net income. So we're going to need to do that for each year. So 2013, so all we're going to do is take those numbers that we're given, the revenues and the expenses, subtract them, and we're going to get net income for each of these years. So we calculate the net income for each of these years. So now off to the side, we're going to calculate the increase, both in dollar and percentage, for 2014 and 2013. So 2014 revenues, I take the 2014 revenue of $20,289, subtract the 2013 revenue of $20,045, and I get a $244 increase in revenue. Okay, So I'm taking the difference from 2014 to 2013, taking the difference, and that's my revenue difference. I'm going to do the same thing with net income. I'm not doing expense because the exercise did not ask me to do expense. So I'm just going to do revenues and net income. I'm taking the difference. If it decreased, I'll put brackets around it to show that it was a decrease. Okay, so I've got the dollar figures for 2014. Now I want to convert those dollar figures into percentages. So what I'm going to do for the revenue percentage, the revenue increase from 2013 to 2014, is I'm going to take the difference in my years, the 244, and divide by the earlier year, the 20,045. So notice that I'm dividing by the earlier year. They want to know year to year, so I'm going to divide by 2013, and I'll get 1.2% increase in revenue. So on each line, I'm going to take the difference between the 2 years and divide by the earlier one of those 2 years. Okay, so I've done revenue. I'm going to do the same thing with expenses. I'm going to take that difference, that 333, the negative 333, divide by the 2013 income of 9,707, and I'm going to get minus 3.4%. That means my revenue, my net income decreased by 3.4%. So my net income went down even though my revenue went up, because presumably expenses increased. So we're going to do exactly the same thing comparing 2012 to 2013. Again, we're comparing to the year before. Okay, so what we're going to do in 2013, we'll take the difference between 2012 and 2013, which is 1,596. We'll do the same thing for net income. So we're just taking the 2 years side by side, and then for the percentages, we'll take the difference between the 2 years, divide by 2012 now. So we get an 8.9% increase in revenue, and then the same for net income. These are all known as horizontal analysis because we're comparing year to year. So that's typically on the horizontal. We have columns for each year, so we're comparing each of those years. So it's called horizontal analysis. Okay, so this is short exercise 13.1. That's pretty much what you have to do for that exercise. We have 13.2 now, which is another short exercise. It's trend analysis again, and it's looking at it slightly different. So we'll do 13.2 next. 13.2 gives us sales and net income, and we're doing trend percentages. So this one that we just did, it asked us to do a horizontal analysis. So we're comparing 2014 to 2013, and then we're comparing 2013 to 2012. So we're going year to year. 2013-2, we're doing trend analysis, which is saying, here's a base year. Let's compare everything to the base year. So in 2013-2, we're not comparing year to year, but we're comparing back to the earliest year. So, and we know that because in 13.2, it says prepare their trend percentages, and it also says use 2013 as the base year. So it's asking us, it's telling us, here's our base year. So it's a little bit different, same principle, but instead of comparing to the year before, we're comparing everything to 2011. Okay, so trend percentages are always the current year over the base year, the difference. So let's just do one. Okay, so the sales trend percentage is going to be taking our sales divided by the 8,410 in 2011, and to get 118%. So we're taking the current year dividing by the base year. Okay, so what we'll do then, so we have 118% in 2014. The net income trend is 155%. So you're taking that number dividing by the base year. So we're not doing differences, we're just taking each number dividing by the base year to get trend percentages. And then you're going to do exactly the same thing for each of the other years. So in 2013, you're going to take 2013 sales, 9,260, divide by 2011, and you'll get 110%. Okay, so then we'll do the same thing for 2013. We get 116%. Again, we're taking every number. So that's what you do on this exercise. And you do the same thing for 2012 and 2011. That's what you're doing when it talks about trend percentages with a base year. So those are two forms of horizontal analysis. We have the regular horizontal analysis where you take the change year to year, divide by the earlier year. Trend analysis, you're going to take the amount and divide by the base amount instead of taking the difference. So that does it for the first learning objective. What we're going to do now, that was horizontal analysis. What we're going to do now is we're going to go to vertical analysis. So vertical analysis, what you're going to do, vertical analysis is within a given year. How do we compare? So vertical analysis, you're going to look at each income. You're going to take a financial statement item to its base. So income statement base is total revenue. So you're going to take each item on the balance sheet, divide by total revenue. On the balance sheet, the base is total assets. Okay, so we're going to, what I'm doing in Chapter 13, Learning Objectives 2 and 3 are very closely aligned to each other. So we've got this slide with Learning Objective 2, and then I'm going to skip over to Learning Objective 3 because they're intertwined, and you'll see why as we go forward. So vertical analysis is saying, here's the percentage this item is of net revenue. It's on the income statement. So let's compare that. We can do the same thing with the balance sheet, figuring out everything as a percent of total assets. It allows us to compare within the same period. It also allows us to compare to companies of different sizes. So we're not leaving Learning Objective 2, but I'm going to show a slide from Learning Objective 3 because there's a very specific form of vertical analysis we do, which is called common size financial statements. Common size financial statement says instead of presenting a financial statement with dollars, let's do it with percentages using vertical analysis. And common size Common size financial statements can be helpful to compare companies of different sizes. So common size is a form of vertical analysis. So I just want to blend learning objectives 2 and 3 because they are so similar. One's a subset of the other. Okay, this statement right here, okay, it's probably one of the most important things, well, it is one of the most important things that we're talking about here. You're going to have a question on it coming up here quickly. Okay, vertical analysis is useful, can be helpful to compare companies of different sizes. So you want to make sure you have that written down. We're going to do a question coming up that's going to ask you, is vertical analysis helpful to compare companies of different sizes? There's 2 big takeaways from this learning objective. One of them is vertical analysis allows us to compare companies of different sizes. So that's great. If we're trying to decide if we want to invest in Pepsi or Coke, we can compare their financial statements by using percentages. The other important thing to remember with this learning objective, so you've got this written down, this little tidbit, because we're going to have a question on it, is the base to use. So vertical analysis, basically we're talking about the income statement or the balance sheet. The thing that you divide each one by does not change. For balance sheet, you divide everything by total assets. For income statement, you divide everything by net sales. You absolutely positively need to know this. I'm going to ask you a couple questions today on it, and I'm going to ask you a couple questions on Wednesday on it. So it'll be things like, to get the percentage of accounts payable on a vertical analysis, what would you divide by? Accounts payables on a balance sheet, you divide by total assets. If it's on the income statement, you divide by net sales. Net sales can also be net sales revenue. Revenue and sales are interchangeable here. These items right here, knowing the base, you have to know the base for questions coming up here today, questions coming up on Wednesday, and questions on your exam. So you need to know when we're talking about the balance sheet, the base is total assets. In income statement, it's net sales. Keeping in mind that net sales can be net sales revenue, so the word revenue could be in there, or it could be net revenue, but it's going to be the same thing. In fact, I'm just going to add that. So I'll keep it net sales revenue. Okay, but it could be net revenue, it could be net sales. It just those are interchangeable terms. Okay. This slide right here is not. I added it last night when I was looking over what we're doing today. It's in the slides you can download, but this was just kind of further calling it out because I noticed I have so many questions today and Wednesday that relate to this. So this is, if you have this, you're going to be able to equip to answer the questions today pretty well. Okay, but right now, so this is something you don't need to write down. This is not something to memorize. This I wanted to show you how we can use vertical analysis when looking at a real-life company. So Pandora Radio. Pandora was the first streaming music service. The first, it was launched in 2005, and they have a premium service and they have a free service. And the premium service, less than 5% of the people using Pandora are paying for it. So they get their money from ads. And so they've got these 2 tiers of service. They've got free and premium, which is named Pandora One. Now, Pandora has yet to earn a profit since its inception in 2005. So it's still losing money. Amazon lost money the first several years it was in existence as well. and earnings have been less than expected in 2015. Actually, Pandora's taken a huge hit on the stock market because of Apple Music and because of Spotify. Apple Music just launched this year, and already Apple Music has 25% of the subscribers that Pandora does, but they've only been in existence this long. Pandora's been trying to gather subscribers. Pandora has the most subscribers of all the services of its free service, but the paid, it's struggling with getting the paid. Spotify is threatening Pandora, as is Apple Music. Apple Music has, Apple said it isn't, well, Apple doesn't say anything, but Apple Music has not been as successful as analysts would have liked, but it's still showing more signs of growth in life than Pandora. So Pandora's got some problems, and it's got some other issues. So when you look at, this is Pandora's financial statements. These just came out. This was September 30th, 2015. And again, Pandora, when it publishes its income, it shows us its advertising revenue and its subscription and other. So it has ads and it has paid subscribers. So we see from 2014 to 2015, its revenue increased. Okay, this is both in advertising and in subscription. So we have the older and then the newer, and it's the 3 months, so for this quarter. And then they show us 9 months ended. So for the year, we look at that and we go, for the year they're up, both advertising's up and subscription's up. Now looking at just that, the only thing I can take away from that is it went up. Okay, both of them went up. And then if I look at the cost of revenue, so Pandora's cost of revenue, we have content acquisition costs went up, so did other costs, okay? And the same thing. So all I can tell right now, it went up. And again, I'm going to see the same thing on their product development, sales and marketing, general administrative. Okay? And then the bottom line, oops, I didn't circle it, but the bottom line is they lost more this year than last year, and they lost more the 9 months ended this year. So this quarter they've lost more, and for the year. So right now that doesn't tell me enough other than the direction of the change. They've got more revenue, they've got more expenses, they've got more loss. Okay? So let's take this same thing and I'm going to put it in common size format. Common size format means that I'm going to divide every single item within a column. This is an income statement, so I'm going to divide every single item within a column by that column's total revenue. Okay? So when I look at this right now in numbers, it doesn't mean a lot to me other than I can see increases. So now what I did is I took in the revenue in 2014, three months ended, I divided every number in that column by that revenue. So now what I see for the quarter, the most recent quarter, is for 2015, it went up, advertising went up slightly, subscriber revenue went down slightly. Probably not the trend that Pandora wants. It wants more subscribers. And for the quarter, the same thing happened even more. Advertising went up as a percentage of revenue and the subscription revenue fell slightly. So that's not a good trend to see. But we couldn't see that with just the dollars, but we can see it with common size. So then we look at this, and this is what really pops out, cost of revenue for Pandora. The content acquisition cost, this is what they're paying the artists and the music studios, went from being 46% of revenue, it popped up to 68% of revenue. Wow, they have a lot more cost of goods sold now. And we see that happening for the 9 months, but what happened for the year, it's 56%, it's kind of buried, but you see in the third quarter, it really popped up. And Pandora does acknowledge when they issue these financial statements, these are published, by the way, with the SEC every quarter. They put notes out with them where they discuss it, and they are having to pay more royalties than they did in the past. So you're seeing them there. And then product development and sales and marketing, you see some increases there. So what's interesting about Pandora is it really pops out at you when you start looking at the common size statements. Now, common size statements, we did the vertical analysis for Pandora. One of the big uses of common size financial statements is to compare to companies of different sizes. So now if we had this, we could take Pandora and we could compare it to Spotify. If Spotify were to issue financial statements, we could compare the two services that way. So that was just to show you in real life what you can do with a vertical analysis. It allows you to understand the financial statements a little better than just looking at the numbers. The numbers by themselves don't mean anything. Okay, so final concept in this learning objective is benchmarking. Benchmarking allows us to compare to a different company using common size statements. Here, Amazon and Walmart are compared. Amazon has a slightly higher cost of sales and higher operating expenses, surprisingly, than Walmart. So Amazon's operating income as a percent of revenue is smaller than Walmart's. So common size statements are great for comparing companies of different sizes. Okay, and these are actually numbers, real numbers for 2012. Okay, now I've got a series of questions. These should be pretty easy going back to your notes that you've just taken. Okay. The first question is out there. The first 3 people to respond got it right. The first 8 people, that's good. 13, we're still at 100%. Okay, so the question's out there. We're comparing companies of different sizes. Vertical analysis would be a useful tool. True or false? Okay, true or false? When comparing companies of different sizes, vertical analysis would be a useful tool. I'm going to close this in about 10 seconds, so if you're not answered yet, now's your chance. Okay, that is true. Vertical analysis is a very useful tool for comparing companies of different sizes. Okay, next question. When performing vertical analysis of an income statement, net income is usually used as the base. Read this carefully. Go back to the slide where I said, here's the two things, one for the income statement and one for the balance sheet. Very carefully go back and look at that. What did I say you divide that by? Fair number of people don't have this one right. You need to look back at the page or the slide where I said, here's what you do. Let me read the top of the slide, the exact title of that slide. There was a slide, I said, you need this one. There were 2 right in a row, and the title was Base to Use, to divide everything by. The balance sheet was divide everything by total assets, and then the income statement was divide it by this item, okay? And was net income that item? I'm going to close this question in about 10 seconds. I'll let you do these. I'll tell you when to. Okay, we're going to close this one. Okay, that is false. Again, when you are performing vertical analysis of an income statement, it's sales revenue is the base, not net income. Okay, so again, when you do an income statement, it is sales revenue is the base. So vertical analysis, income statement, sales revenue is your base, not net income. Okay, this one should be pretty easy. Which of the following is typically used as the base in a vertical analysis of an income statement? Okay, which of the following is typically used as the base in a vertical analysis of an income statement? Going to close it in 10 seconds. Okay, again, net sales revenue, that is the base. Okay, staying on that same slide, one last question related to it. Which of the following is typically used as the base in a vertical analysis of a balance sheet? So now we've changed to the balance sheet. Okay, now I'll just back. Okay, which of the following is typically used as the base in a vertical analysis of the balance sheet? Again, going back to that same slide we've been on. Balance sheet. Okay. To use it as a base, it has to be on the balance sheet to begin with. So when you're answering this question, I see a lot of people selecting an answer that isn't even on the balance sheet. So think about what's on a balance sheet. A balance sheet is assets, liabilities, and equity, stockholders' equity. So we're going to close this question in about 10 seconds. The base vertical analysis on a balance sheet. Okay, vertical analysis on a balance sheet, total assets. So it's an income statement, it's sales revenue. If it's a balance sheet, it's total assets. Doesn't matter. Those are the two things you need to know about the base. Okay, we've gotten to this halfway mark in the chapter, so I think I'm going to stop class now, and we will do the ratio analysis on Wednesday, and we will be done. So I will see you on Wednesday.